All right, research that I did, shows that family forest owners are many times more likely than U.S. taxpayers in general to owe federal estate tax. Actually, they don't know it because they're dead, right? To incur it, their estates incur it, okay? Of the forest estates that owe federal tax, over 40% either sell land or timber to pay part or all of that estate tax. And when land is sold, about 25% of the land that's sold is converted to other, more developed uses. So you can see the effect of the federal estate tax on forest estates. The federal tax on transfers by gift or at death ramps up quickly, and the top rate is now 40%. All right, this is the schedule. All right, you see the estate tax, transfer tax starts at 18% and ramps up to 40% of amounts over $1,000. That's the schedule. That's not the effective rate, but that's the schedule. Okay, there are provisions in the federal estate tax that can help family forest owners be better stewards and foster family forest enterprises by permitting part or all of the family's assets to pass untaxed from one generation to another, and also by reducing pressure to liquidate timber or fragment holdings in order to pay the federal taxes. They can also help you avoid bad air days. I meant to start off saying there's two things you don't talk about in an ordinary social situation, death and taxes, and I'm going to talk about both of them. Okay, this talk this morning focuses on the estate planning process. We'll talk about that. And then this afternoon, the breakout session, I'm going to talk about specific tools for estate planning that are of interest to family forest owners. I want to warn you that even together, these two talks only introduce a very complex area of law, and as I'm going to tell you this morning, you're likely going to need professional help in order to develop a successful and suitable estate plan. All right, who in the room here has an estate plan? All right, now the answer to that is that everybody should have raised your hand, okay? Because even if you don't have your own personal plan, every state has a law that designates how the estates of residents who die, who die with or without a will. Without a will would be intestate. Or no, not with a will, but without a will. Only applies to people that die without a will. Is divided among their heirs. All right. The problem with this estate plan is that it's one size fits all. So it may not suit the specific characteristics and needs of your family. Also, it's more likely, it's likely more complex than it needs to be for your purposes, and it's likely more time-consuming and expensive to implement than necessary. So for those reasons, it's good to have a plan of your own. So developing your own plan allows you to choose your personal representative or executor to provide for the needs of your specific family, including your spouse, any minor children or special needs children that you might have, to provide for the timely transfer of assets, to ensure that particular assets go to the persons that you want to have them, to provide for continuity of management for your family forest enterprise, to make charitable bequests. I don't think any state plans allow for that. Also, it'll help you minimize probate costs and estate taxes. All right, so there's basically 4 steps in the estate planning process. The first step is to take stock and then select your team. The third step is to develop and initiate your plan, and the fourth step is to review your plan periodically. So I'll talk about each step individually here. So the first step, taking stock, is the first part of this is to take stock of all the assets in your estate, forest land and other assets, including for the forest land in particular, where it's located, its legal description, the form of ownership that you're holding, and whether it's fee simple or in a partnership or in some kind of organization, and also its current value. And if you haven't had a timber sale for a while, you may be surprised at how much your forest land is worth. Hopefully you're not too surprised. Also, you want to take stock of your heirs, including including their lifestyle, their financial needs, and their level of interest in helping to manage the forest land. All right, this is best done in conversation with your heirs. You don't want what you're coming up with to be a surprise to them. you really would like to have their opinion on these things, all right? So if you're kind of wary about talking to your heirs about your dying, you can go to this website, and they have ideas on how to initiate and conduct either one-on-one or discussions or family meetings with your heirs, okay? So this is the Northeastern Area, the Forest Service, Northeastern Area State and Private Forestry website. The address is right here. Okay, so that's taking stock. The second step was to select your team. You could have as many as maybe 6 members on your team. Not everybody's going to need all 6, but some people might need all 6. So that team consists of you, an attorney, an accountant, hopefully a CPA, a bank trust officer, an insurance person, hopefully a chartered life underwriter, and a forester. All right, I'll talk about the roles of each person individually. So your role is to set the overall objectives for the estate plan and to make sure that they're met in a cost-effective way, okay? The second member of your team, the attorney, they're your key contact with the whole rest of the team probably. So they coordinate the overall process. They work with the other team members to evaluate different strategies that they think of. They provide professional legal expertise, and they draw up the will and other legal documents. The role of the accountant is to provide professional expertise on the interaction of federal and state taxes, and to file the estate tax return and other required tax documents. The role of a trust officer, if a trust becomes part of your estate plan, is to provide professional expertise on how different types of trusts can help meet your objectives, and also to provide trust services. If your estate plan involves insurance, the role of the chartered life underwriter would be to provide professional expertise on how insurance can help meet your objectives, and also to provide the insurance services. And the forester develops and executes the forest management parts of your plan, both for you and potentially for your heirs. Okay, the third step is developing and initiating your plan. It's important that you oversee the development of your plan yourself, and that you put when you have a plan, that you put it into action. The development part, if you relinquish oversight to the other members of the team, there's a good chance that you might end up with a plan that costs more than it needs to, and really doesn't even meet your objectives. So you need to you need to steer that team. You need to have your supervisory role. Okay, and then the fourth step is to review your plan periodically. So you need to make sure, at least periodically, that it continues to meet your needs. And the minimum of times to do this would be following a change in your holdings, in your family situation, or in the tax law. And that occurs pretty much annually. All right, so I'm going to talk a little bit here about estate planning tools. Well, I'm just going to list them. There's some general tools, and this is what I'm going to talk about in more detail this afternoon. So what I'm going to talk about this afternoon would be some general tools that are available to all taxpayers, things like gifts, bequests, the marital deduction, unified exemption for gifts and estates, which is a really big deal now, and disclaimer. There's some other tools that I'm not going to have time to talk about this afternoon, but that would be things like a retained life estate, deferral and extension of the estate tax, and generation skipping transfers. But the first 5 are probably the most important tools. All right, and then there's also, in the tax law, there's targeted tools that are specifically designed to help owners of working lands, so your family forests, but also farms and ranches. So this is things like special use valuation and exclusion for land subject to a qualified conservation easement. Now, all of these things I've talked about so far are specifically provided in sections of the Internal Revenue Code. But there's also advanced tools and strategies that have been developed by estate planning professionals that aren't specifically provided in the code. So this is to be things like forms of organization, like a family limited partnership or a limited liability company, and also trusts. Okay, so I have, until I get cut off, I have time for questions.